Welcome back to Explain the Charts. Today we're analyzing AUDUSD, incorporating the latest news and candlestick data to formulate a trading strategy. We'll consider economic factors, potential support and resistance levels, and overall market sentiment to get a clearer picture of where this pair is headed. We'll start with current news based on Google search results. Recent news indicates that the Reserve Bank of Australia cut its cash rate in June, which is a bearish signal, but is prepared to pause if global conditions worsen. Meanwhile, the Federal Reserve is expected to hold steady, which could be bullish for the USD and therefore bearish for AUDUSD. The data shows that speculative net shorts on the AUD have reached their highest since April. Let's dive into the charts and see how this news aligns with price action. Looking at the daily chart, we can see a general downtrend. Note the large drop around early April 2025, which was an over 4% drop in value in one day. We see consolidation around late May, before the price had one final attempt at breaking a local high before dropping back down in mid-June. Now, let's move in closer to the hourly chart and examine more recent price movements. Switching to the 1-hour chart, we see a clearer picture of the current consolidation period. There seems to be support around 0.6460, which could be a point to open a short position with appropriate risk management. The price seems to hover between 0.6475 and 0.6490. A break below 0.6460, supported by bearish news, could signal further downside. Resistance seems to be firm around the 0.6550 area. A break above this is unlikely but would indicate bullish potential. For a closer look, we will now examine the 15-minute chart. Focusing on the 15-minute chart, we observe the consolidation in much greater detail. The very recent candles are struggling to break above 0.6480. If we don't see a sustained break, there will likely be more short-term downside. The overall outlook is bearish due to fundamental pressures, as well as downward chart trend and recent behavior of this pair. Looking at the daily chart, the lows in late November 2024 around 0.6300 would be a good place to take profit from any new short positions. Watch for any positive news related to the RBA as indicators that we may need to move our stop loss higher or reconsider if we should be holding a short position. To recap, the key price levels to watch are support around 0.6460, resistance around 0.6550, and a profit target around 0.6300. With current market conditions and recent events, a break below 0.6460 is the most likely scenario, perhaps around 60 to 70% likely. However, this is conditional on the Fed maintaining its current rate policy and the RBA not having any more surprising news. If the Fed cuts rates sooner than expected, this would increase the likelihood that the price breaks upward. Thanks for watching Explain the Charts, and make sure to have good risk management.